Good morning. Welcome to Easy Money. I am CA RUDRAMURTHY, author, trader, and trainer. Nifty after closing on Wednesday down close to 150 points. Markets were closed yesterday because of Ramzan Eid. And then you saw recovery both in Asian market as well as international market. Yesterday, in fact, Dow gave that recovery what was expected, and in spite of rising inflation, markets are definitely taking no sense of any of these short term market movements are all based on the reality of flows and liquidity. If you see Indian market, SGX Nifty was showing at one point of time close to 200 points fall yesterday, but however we can see the complete recovery in market as of now, and as of now we are opening completely flat. Even though your SGX might show about 100 points recovery compared to yesterday's close, from there markets are now back to the same levels where it closed day before. Now market is definitely looking at crucial supports at levels closer to 14,700 to 14,600 zones. However, we are still in the broad range of 14,200 on the lower side and 15,000 on the higher side. This 800 points range is maintained by the market. However, FIIs and DIIs continue to be net sellers. Then who is buying this market? It is, yes, the retail people who are strong enough now to say that yes, the outflows of both FIIs and DIIs are taken care by the retail people. Market has been very stock specific, and mid caps and small caps have given wonderful opportunity, but for the first time we have seen metals seeing some amount of profit booking day before in the market, where stocks like SAIL, Tata Steel, and most of the metal packs, whether you take Jindal Steel, all of them showed some signs of profit booking. However, for very short term, some amount of profit booking can be seen because some of these stocks have gone up anywhere between 3 to 5 times just in a period of last few months. And this rally has been so steep. Some amount of profit booking is now seen, which will give opportunity for many people who have missed out the rally to re-enter these markets on a lower end. However, people who are all getting bought at the last part of this up move, and for a short term traders who are all getting caught at the higher level, they might face this down move as a jittery level. However, for me, any down move you get in stocks, especially like Tata Steel, on crucial support levels will be a great opportunity to buy. And today in our chart check, I am showing you a stock which you will be definitely keen to watch on. And let me just give you that chart check, and I'll be looking at a stock called SPARC for you. And let me just take the screen on SPARC and let me give you the chart check. So if you just see this on screen, SPARC has been one stock which is giving great opportunity for people to enter. However, this stock, Sun Pharma Advanced Research, has been a stock which has seen a clear breakout at levels of around 195 to 200, and now this stock non-stop has made a move. Any correction in this stock to levels closer to 210 will be a great entry opportunity. Or even let us say at current levels, if you start buying any dips in this stock, you should keep bullets open to add or to average to this stock. Don't buy all your quantity at one shot now at current price. Wait for dips to levels of, let us say, 210 to 220. So from current zones of 240, any dips to 210 220 will be a fantastic long term buying opportunity on this stock. And if anyone does not get the dip, and if you want to enter at current market price itself, then you should have some amount of space and capital kept as reserve to buy on any dips to these crucial zones of 210 to 220. However, long-term insiders who have input on this stock and who have fundamental news on this stock has entered closer to levels of 170 and 180, and these people don't sell it for 2-3 rupee kind of a target, so or for some percentage or 5-10 percentage kind of a move. So for me, for all long term investors and even short term traders, you can definitely enter SPARC at any dips to levels closer to 210 to 220, and look at higher targets of 280 to 300 to come for short term, and for long term investors even targets closer to 400 to 500 is possible on this mid cap stock, but for that you have to give time of at least 1 to 2 years. Looks very strong to me on chart. Now, having seen this SPARC chart, I want to also tell you, when you construct a portfolio, ensure you have a mix of short-term stocks, medium-term stocks and long-term stocks based on your risk profile and time period. Also, what is very important is have a mix of large cap, mid cap and small cap. So based on your risk level, based on your time period of investing and trading, based on return expectation, based on market opportunity, you have to make a portfolio. Also ensure you have a sector division. Many a times I've seen people, they will have 10 stocks well diversified in their portfolio, but all stocks will be from the same sector. Some of them will have all stocks from only banking sector. Some of them will have all stocks only from pharma sector. And I know few of them, they had all stocks only from real estate and infra. And when there is a dip in real estate and infra, no meaning of diversification, because every stock will start reacting on the downside. So it is very important to construct a well diversified portfolio based on your risk levels, based on your time period, based on your return expectation, and having a mix of large cap, mid cap, small cap. Having a sector diversification is very important, and more videos on these things I will be definitely providing you. And I'm sure this chart analysis gives you a lot of perspective on market, lot of great stocks where you have made money. And even let me tell you, stocks like BHEL should see some amount of profit booking. And now let me tell you, even if this stock goes to, let us say, 90 rupee, 100 rupee, you don't have the comfort of risk reward of buying now BHEL and looking at hardly some 15 rupee kind of a target, whereas when we bought BHEL and the chart which was recommended to you, it was available just to you at 57-58 rupee, and non-stop from there it achieved our targets of 75 rupees. And in F&O, these returns are close to double return because of leverage. Stock, in fact, in absolute terms itself gave a return close to 40-50% just in 3-4 trading sessions. Do not expect these type of returns every time. You have to understand market is supreme, and buying right stocks is very important. Constructing a portfolio, managing risk, having proper stop losses, targets, entry are all very crucial. Position sizing plays such an important role. More and more content on all these things will be available to you regularly on your Easy Money. Do forward this video to as many people as possible and join hands with us to spread right financial literacy. Signing off, Rudramurthy from your Easy Money. Your stock, your comments, do write without fail below, and see you all with more videos. Happy trading. Take care. Thank you.